As the topic today says, foreign exchange is one of the most volatile elements of risk. It is extremely uncertain. Mr. Desai established it very, very clearly, and it is very complex. So it is no different for us, but I would like to articulate to you that what we are doing in this volatile, uncertain, and complex situation in dealing with it. I always believe that any foreign exchange management has to be relevant to the business, and it should not be an exercise in itself. As Mr. Desai said, I 100% agree with him. Foreign exchange is all about supporting your business to protect its top line and bottom line. It's not about making treasury as a profit center. So first thing a finance or a treasury guy has to do is to make sure that he understands the business. What are the challenges on the foreign exchange of the business? That's why I have kept a very small introduction of just giving you the background. I have just 2 slides on the business, what is our business, and then I will talk about what we do in terms of foreign exchange management, and then when we go to the next step, maybe we can look at some questions and answers. I also have Mr. Mallikarjun with me, who is head of our treasury. So actually he's the one who does most of the work on this, so he's also available maybe during lunch and all for any discussions. So just to give you a insight into our company, we are a growing company, which is not very large. We are about $345 million. We are trying to be $1 billion in the next few years. You can see the small bar on the first chart that depicts the profit. So typically the company will make 18% to 20% margin. At the operating margin level, we will make 10 to 12% at net profit level. Why I'm mentioning this to you is, please understand, when you're operating with a net profit margin of, let's say, 10 to 12%, or an operating margin of 18 to 20%, the impact of the foreign exchange can be very significant. If you see, if the rupee changes by about 10% for exporters like us, the impact on the bottom line could be, I don't know whether you can guess, it could be 3 to 4%. So how much money the business is making versus how we support that, you can make a lot of difference to the shareholder value. So this is just a view of our company. I think Mr. Shanmugam already mentioned that we have about 10,000 plus associates. As we speak, we have about 11,800 associates in 36 locations. Our locations are predominantly, it's an export company, so 97-98% is export. Americas, we have Europe, we have in Asia Pacific, mostly Australia, Malaysia, Singapore. So what I'm trying to say is we have to deal with multiple currencies. So dollar is one important currency. We have to deal with euro, we have to deal with GBP, we have to deal with Australian dollar, multiple currencies. And you do have some expenses in various currencies, and you have expenses which are in Indian rupee. What we do in terms of business, if it is of interest to you, we are into various segments. Aerospace is one of the largest segment for us. Rail transportation, we do the engineering work for rail transportation, industrial equipment, telecom, utilities, data analytics. That is very briefly about what we do. This is just another slide I have on the business, and then we will come to the subject of foreign exchange. This is just to tell you, you have to be aware when you talk about your foreign exchange, you have to be aware about what is your customer, what is his P&L, in which currency it is, how are your contracts, what are your contracts saying, which currency they are into, who bears the foreign exchange losses. So in our case, most of these people are, many of them are Fortune 500 companies. You can see the logos, for example, in aerospace, we have Boeing, Airbus, Dell, United Technologies. In transportation, which is mainly rail, Siemens, Bombardier, Alstom, Caterpillar, John Deere. So I am trying to tell you, these are the companies whose P&Ls are in respective currencies or in dollars. And you have to be aware of how the contracts are with each of the customers. Now, I was really quite at a loss, what should I share with you? We are a listed company. As you saw, our market capitalization is about 3,500 crores. And in terms of the governance process, it is very robust. Every quarter, we have a board meeting where, especially in the last many quarters when rupee has been moving from one place to another. Every time there is so much pushback on me and Mr. Mallikarjun. Every time we have to go back and probably we are asked, are we doing things right? Is there a need to shift gears? Should we take more positions? Should we take less positions? So I thought, let me just explain to you what we are doing here. As I said, in terms of our foreign exchange, mainly predominant exposure will be US dollar, euro, GBP, Australian dollar, and the highest exposure will be in US dollar. So what the company is doing, company has got a very clear foreign exchange policy, and I'm talking more from the foreign exchange risk management, from the P&L perspective. When you are an exporter, I'm again speaking in my current position as an exporter. In my previous companies, I have also dealt as importers, but here my perspective is more from the exporter perspective. So what we do is, we take a stock of what is the net inflow which is estimated for the next 12 months. We have to look at what contracts we have, from that what revenue we expect, how much are our expenses in the foreign exchange, and we arrive at net inflows for the next 12 months. And based on those net inflows, we try to take 70% forward contract. We take 70% forward contracts for the net inflows, 30% we keep open. The idea here is that when you make a budget or when you make a contract, you have an estimate of a margin on a contract. And assuming that your order pipeline or your certainty on revenues or customer contracts is at least to the 6 to 12 months, you try to protect your margin on the contract at least to the period of 6 to 12 months, keeping a little window. You can always debate why it is 30%. We keep a window of 30% open to take care of the fluctuations in the market. We also, in terms of the instruments, I think we are not traders on foreign exchange. As I said, we have a very strong belief that treasury is a function to support business and mitigate the downside to the margin. We are not here to make money out of the treasury. So we don't get into any trading. We don't try to time the markets in a large ways. For example, how do we take this cover in the next for 6 to 12 months? I think it is in a simple manner. You keep on rolling it over. It's not that you extraordinarily try to time the markets. In the current situation, what happened when the rupee has changed from let's say a level of 47, 48 to 54 in the last year end, and then it has moved towards 65, 66 and all that. What is the impact on the business? Definitely from the exporter perspective, since your predominant revenues are in foreign currency and predominant expenses are in Indian rupee, you do end up making more money.